Hey, it's Sheryl Lazar with the Blockchain Report. Now I'm with Mike Jones. He's the CEO and founder of Science Inc. Thanks for being here today.
Thanks for having me.
Now tell us why you decided to jump into the cryptocurrency blockchain waters, since you are a more traditional VC investor.
Sure. So, as you know, we've been building companies at Science for over 7 years, and we find kind of areas that excite us. So we started in commerce, then we went to marketplaces, and then mobile. And as a longtime technologist, I've always been really fascinated with what's going to change fintech, like what's really going to impact money. And when you think about the last, call it 20 years of the internet, direct-to-consumer commerce and shopping was really nailed by the web, and obviously retailers and manufacturers are really feeling the impact. Media has really been fundamentally changed by the phone.
Yeah.
The winners in mobile media consumption are not the traditional legacy studios, and that was a huge change. And when I started looking into Bitcoin at the kind of origins of it, I started feeling like, oh my gosh, maybe this is a moment where you're really gonna see a change in the way that finance is managed. And that's both how currency has moved, how values moved, and also what we're seeing is kind of how ownership has moved around. And so as curious technologist investors, it felt like, look, we need a bespoke fund where we can spend time, working with entrepreneurs, investing in companies, and really helping build and exploring what does blockchain mean to fintech.
And so what interests you when someone comes to you with an idea? How do you decipher what you want to get into versus what might be like a sham or not work very shortly thereafter?
Yeah, and in blockchain, it's been kind of hard, right?
Yeah.
So, from a personal perspective, I look for things that I'm really interested in and that I connect to. So if I don't have an interest in it, I know it won't carry my interest. I know that I won't really be able to engage fully with the company. So I want stuff that I'm really connected to. And then I obviously look for founders that are super passionate about what they're going after, and they're going after it with a mission, and they really feel like this is their purpose in life. So that's how I kind of qualify it. The problem in blockchain has been you had a lot of kind of random concepts that, especially through the late 2016 and 2017 time period, were like severely overfunded. And what I found myself in conflict is I would look at these concepts and I would say, this founder is not really mission driven. I'm not super interested in the idea. In fact, I'm pretty sure the idea won't work, but my gosh, it looks like it's gonna be worth so much money because crypto's in this crazy bubble. And so we didn't take on those projects from an incubation perspective. Our traders sometimes traded in high volume ICOs because that's kind of what happened in 2017. But I had to stop myself from saying yes to a lot of stuff because I just didn't feel like the founders' hearts were in it, and it felt like the kind of frothy funding environment was just kind of bringing a lot of kind of passive tourists into technology that suddenly were funded with projects that I didn't think were gonna go anywhere.
People were saying this. It was the people that had failing web companies or social companies, and they're like, this new space, maybe people will give me money here.
Yeah, and I remember, as the web was growing and I was graduating college and building websites and starting to work with these companies, I remember I hit this point where I knew all these realtors, and all these realtors were now pitching me their web ideas, right? And then that kind of fizzled, right? And then when mobile happened, I remember another moment when realtors, somehow I ended up at some conference and there was a bunch of realtors and there was a bunch of independent contractors that were like, I'm gonna build my dreams on mobile apps. I was like, okay, we've really hit peak entrepreneurship in the sector. And then same thing happened the latter portion of 2017. I was at a conference, speaking at a conference, people started coming up to me, I'm talking to them, a lot of realtors, a lot of independent contractors. So they felt like they saw blood in the water with fresh, easy money, fresh, easy, fast returns. They kind of shifted their moment in there. They weren't diehard technologists, they were really opportunists kind of jumping into the sector, and now that's kind of shaken out because 2018 was a pretty difficult year for ICOs, so the funding isn't quite as liquid or as fast or as easy as it was in 2017. So now people really getting into it have to have a lot of conviction.
So yeah, what are you seeing now in 2018? What is working?
So there's a handful of companies that are actively writing product to the blockchain. So we did an investment in incubation with a company called Springroll that does endorsements on the blockchain where you can kind of verify your LinkedIn, verify your credentials as a potential employee or person, and they're actively writing things to the Ethereum network and verifying those transactions, etc. There's a handful of other companies like that are actually using blockchain for reasonable purposes on the network. Then there's a lot of stuff that just really isn't doing anything, right? So when I think from a sector perspective, I like areas where there's data pools that shouldn't be owned by people, right? So your argument could be, Me as a person, the hospital owns my medical record. I don't like that. That should be in a public data pool that's encrypted and safe. I should be able to retrieve information from it. I should be able to deposit information. I should be able to dispute information into it, but it's not controlled by a singular entity. Or in Springville's case, my work profile, it's owned by LinkedIn. Is that right? No, it's really mine. Maybe there's a data pool. So one sector I like is this idea of data pools that connect to personal information. Another is on the transfer of scarce goods. Ticketing is a perfect example, and we're starting to announce a partnership with a big ticketing company, and I think ticketing will be massive on the blockchain because it's fraught with fraud, with second market scalpers. There's a whole bunch of problems in ticket controls. The third that I really like is secure messaging. I really think email is fundamentally inefficient. I don't like the idea when I write you an email, which I write you emails and like it's copied a bazillion times on my account and your account. It's like, feels very wasteful and feels very insecure. So I'm interested in like secure messaging. And then of course, I think the big one that we're gonna see in 2019 is the transfer of securities. And that's gonna be a really big moment.
So are there companies that are doing that right now that we should be looking out for?
Yeah, so there are. So the overall market thesis is, if you're an investor and you want to buy stocks, there's lots of stocks in NASDAQ and the Dow that you can trade upon. But whether you knew it or not, there's all these other securities that are not traded. And one of the ones that's really locked up right now is REITs, which is real estate investment trusts, like these entities that own a bunch of real estate. And there's a lot of money tied up in these real estate vehicles, and they're not easily tradable. They're not easily sellable, and for normal people, it's really hard to buy them, even if they might have good returns, because they don't really trade, right? So we've been scouring. We found a lot of groups like ourselves that do security offerings in a token form, which is what we did. But I've not found very many companies that are creating a platform to bring a lot of products online. And so we've just found a company in New York. We haven't announced our relationship with them yet, but they're building a platform to onboard thousands and thousands of real estate products, into a tradable form. And I think that'll create a whole new market that really wasn't possible before the kind of use of blockchain as a security token. And I think that actually might be a whole nother kind of second coming of the ICO.
Wow. So ICOs are not going anywhere?
No, they might change. I think the security token ICO, where it's kind of a regulated fundraise, like you'll see more of that. There'll be probably more big networks that are kind of pre-selling use, like almost like Spectrum on their network through tokens, but they're not going anywhere, but it's definitely gonna change.
Yeah, I mean, there's so many companies that have failed.
Yeah, there's a lot of dead companies out there. Yeah, I mean, granted, we looked at two views. We took all the ICOs that we found in market, and this is actually, we're an investor in a company called, ICO Watchdog, and they do a lot of analysis, and they looked at the performance of tokens in the market, and then we also looked at the activity of the developers building that code. One thing that was interesting is from ICO price to current price view, everyone's like, oh, they're all down. They're not all down. In fact, like a large portion of them actually were like up compared to the ICO price, which I didn't really realize, right? And when I looked at the breakdown of basically these ICOs that were either negative or positive, it kind of reminded me of angel investing. Right? We're like, if we took all the angel investments from 2016 to 17 and we smashed them together and we valued them today, you would have a very broad spectrum of stuff that was high performing and stuff that was really negative to the original security sale price. Did not feel that different. Now, what's different now is those weren't sold as securities. Random at-home non-professional investors might have participated. They might not have been prepared for the bloody red component of the losses. Whereas like as a professional angel investor, I understand that I'm going into a high-risk sector. But the second view we looked at was like, those projects actually writing code. Are they checking things in their GitHub? Are they actively writing product to basically bring their project to life? And that was a little bit more sad, where it felt like a lot of them had not made technical development progress on their project.
Why? How do you get all that money and then not do anything?
Well, it's really easy. You give really young people money with no governance or oversight, and sometimes it doesn't breed urgency to development. So obviously, in a regulated sense, when we do a funding event with a startup, typically there's a board. That board has oversight over spending. That board's going to be talking to the founders on a highly regular basis to make sure that we're moving along with what we said we were going to do. But since ICOs were structured in a way there was really no oversight, you suddenly gave a lot of money to a lot of people that were left on their own. And some of those people did really strong ethical things and they built those projects, but some of those people didn't.
And what about in terms of the coins out there in like crypto? We saw super high numbers with certain ones last year. Now it seems like everything is down. what should people be getting into? Like, what are you looking at? Because you're investing in some companies based on Ethereum right now. Yeah. I've invested in Ethereum, but like I've heard, don't do that, do this. Like, go to EOS, go to like. From your perspective, and this is not us telling you what to do or how to do it, but I'm just interested.
Yeah.
Like, where should people be putting their money?
Well, I mean, I think anytime. It's very similar to the way I think about angel investing. So I met someone the other day that said, look, I'm about to do my first angel investment. And I asked them, like, how much money do you want to put into angel investing? And they said, I'm going to do $25,000 this year, and I'm going to do one deal. And I was like, okay, right there, I don't want you to do that. So my first perspective is like, look, if you're going to step into really high risk investing, you have to be prepared to lose all your money. So you better be completely prepared for that. And the second thing is, don't think you found the one. Like, I feel like I'm very educated in investing, and I don't know if I found the one. So, if you're going to go into angel, or you're going to go early tech, which is what's called, tokens, kind of early tech, first off is you need a portfolio approach, right? Again, you also need to be prepared to lose everything. The third is you need to do a ton of research. And similar to private angel investments, there's not a lot of public data available. In tokens, there's public data available, but it may not be enough for you to really make an educated decision. Yeah. And then you also have this overarching problem, right? The overarching problem is that you and I may have a great company, and maybe we're doing ticketing on the blockchain, and we have this incredible deal, and we're about to launch some major artist partnership, and then Ethereum just takes a dump, right? And Ethereum has this huge down 10% day. Typically, if we're built on Ethereum, our token falls as well. So even if we do a super great job on building our company, there are these overarching market trends that are bringing the value down on these tokens, and that gives me bigger concern. So one thing I'm thinking through a lot is like, when will we see a company who has a functional use token in the market that does something great from a commercial perspective, they actually build their business, and they can go super counter to the trend of Ethereum or Bitcoin. I don't think we've really seen that yet meaningfully.
They would have to launch their own token, but it would need to be like...
It could still be on Ethereum. I just want the price to not be correlated.
Interesting.
Yeah.
How would that be possible?
Well, it's the same reason why, it's almost like saying, well, if Apple's stock is down, then every other mobile company that operates in Apple is down.
Yeah.
But that doesn't really happen, right? If Apple's down, it's not like Candy Crush is less profitable that day, or that Clash Royale is not going to do as well. They're still going to do well, probably, right? And so you think of them as separate vehicles, but right now, everyone thinks as one big thing. It's like, imagine if we dumped all the internet stocks together into a big bubble, and you're like, I'm just investing in the internet, right? Yeah. Like, it's not really an effective approach. So there has to be a decoupling of the platform tokens and the tokens that represent business value or business activity, so those businesses can go run on their own and not be weighed down by the platforms.
Finally, if you can make a prediction about where this will all be 10 to 15 years down the line, what is that prediction?
Oh, wow, 10 to 15 years, that feels very, very far out, right? But let's go with big things. So I think that there will definitely be a big shift to security tokens and the ability to trade things you can't trade today. Like, so let me give you an example. Let's assume that you wanted to put $10,000 into Manhattan Beach real estate because you really believe Manhattan Beach is gonna be an up-and-coming neighborhood. It's really hard for you to do that right now. It's not like you can go buy $10,000 of a zip code, right? You typically have to buy a house, or you have to buy into a portfolio of homes. So I look at areas like that where I feel like there'll be fragmented ways for you to trade in that because of the nature of security tokens. So 10 to 15 years, I think there will be the ability for you as an investor to buy things you can't buy today with a lot of liquidity, and individuals will benefit from that if they're smart and use that approach. Okay, so that's a big change, right? The second piece is, I think 10 to 15 years from now, you have to really debate on the value of paper currency and whether we finally just fully move digital, right? And I don't think the US is gonna be for sure the first country to do it, but I think you're gonna see countries really going deep behind digital currency. And that will change certain things within the operations of those countries. And it may be a country like Kenya that steps up, because Kenya embraced M-Pesa as this digital currency where you could pay your bills through your cell phone, through what was one of the first really digital currency systems. And they did it because there really wasn't banking infrastructure, there really wasn't penetration of Visa and MasterCard and Amex, but there was penetration of cell phones. So the cell phone carriers stepped up and kind of became payment companies through the introduction of M-Pesa, and this has been going on for I think over 10 years.
Wow.
Right? So that country is really above us on the way that they think of currency and payments. So I think there'll be a big shift in countries in the way they think of currency and payments. I think that'll be major. The third trend, which I think a lot about, is you know, when the internet first moved, it's funny because right where this office is located is right near Media Temple, where the old Media Temple office, which was one of the big web hosts in LA. And 10 to 15 years ago, you really thought about web hosts. Like web hosting was like a big thing, right? There's all these like little web hosts. And then suddenly it went from this highly fragmented market to this deeply consolidated market underneath Amazon, right? And one thing that blockchain is enabling is anyone can kind of be a host, right? Like you can set up your own Ethereum node or your blockchain Bitcoin node, and you can get rewarded for powering that network. So suddenly we went from a deconsolidated internet infrastructure play to a highly consolidated internet infrastructure play. And it's possible that in the next 10 years, 15 years, you go back to a deconsolidated internet infrastructure play, which means that individuals' computers at their homes and their phones may act as relay nodes within the network and may be rewarded for such.
You don't think a big company would then come back and consolidate those?
That's the question,
That's
right?
Like
so I've been waiting, right? I've been waiting for when you see Amazon Web Services announcing they've just initiated their Bitcoin farm, right? Like why? Like think about it. Like Amazon Web Services certainly has the ability to do massive levels of Bitcoin mining, right? And there's no capital needs, right? And Bitfury just announced all their public numbers for their IPO, and the numbers are really big. This is not a small market, right? But you haven't seen any major players, Google, Microsoft, Amazon, announcing huge infrastructure plays to support the Bitcoin network.
Do you think they're working on those things? I mean, they need to be.
I think, yes, let's assume that they're super intelligent people and they are absolutely working on those things, but they haven't like stated it, or maybe they're doing it and we just don't know about it. And we certainly know countries like China have a big kind of consolidated plays around supporting these networks, but that is just a big shift, right? We went from deconsolidated to highly consolidated, and the blockchain and the payment systems really do allow for a deconsolidated network.
What about these social networks like Facebook and, you know, or on obviously Twitter, YouTube, like where are they gonna be within this blockchain universe?
So I don't think that, you know, I've gotten pitched a lot just because of my background with MySpace on like, oh, I'm creating, you know, the alternative to Instagram, the alternative to Spotify, the alternative to Facebook, but the difference is you get paid. You get rewarded for usage. We're gonna rev share the ads back to you. One thing that I've been really surprised about is I'm not sure you can ever financially incent somebody enough to get them off of the major platforms. You know, so everyone thinks that, oh, well, gosh, if you make $7 a month, you'll leave Facebook and go to this new platform. It's like, I don't think you will. And so I don't think that, like, I think that big social hubs that are very trend driven, where all your friends hang out and share information, I think that probably stays the way it is now. It may not be called Instagram or may not be called Facebook. I do think that a big change, and last night I was out with, believe it or not, like we have an investment with a company called Pray, and Pray provides a platform to spiritual organizations to have kind of private communities. It's like a privately built Facebook for each church or mosque or temple, right, or whatever. And I went out to dinner with all these spiritual leaders, which I just haven't, like, I don't spend a lot of time with spiritual leaders. Cool. Super interesting. They all have like huge congregations and they speak to 12,000 people and all this stuff. And one thing they were talking about, which I keep getting back to feeling like, is people are feeling a little sick from social media, right? Like we've effectively, me being part of the software complex that built all this stuff, created this wonderful game for you, right? You have a global point score on how many friends and followers you have, and you have a daily point score on how many likes you get on your photos. And you play that game every day. And the only way you can win that game is being crazier and more bombastic than the last day, so you always get the most points, right? Well, what that leads to is a world where, you know, if you're not Kylie Jenner with a new Ferrari every weekend, you kind of feel sad because you're just losing the game. And I think that, you know, I look at my daughter's group of friends that are like 13 years old, and they're feeling a little sick from it. They're like, I don't know, like maybe we don't need to play this game, right? And so I'm hoping there's a trend of people realizing that this comparative culture we've created in this game that we've architected, that everyone plays so efficiently, might not be the most healthy thing. And so I'm hoping that one of the big changes in social media is it really does become more intimate communities where people communicate in a more personal and vulnerable fashion, you know, to connect with each other, versus just the game of likes and counts, which is just it's a hard game to play. And
then how are then media companies or publishers like us supposed to then hit those communities?
Well, maybe through methods that just aren't as gamified. You know, like, you know, there's this clash right now between media and gaming. And we play on it, our companies play on it like we see it. It's taking game economics and putting it into like media consumption and social media consumption. But I think we're all gonna realize like it's a difficult game to win.
And I think that maybe in the future, media companies will be, maybe if they are on the blockchain, in some way, like the public will have maybe ownership of things.
That's true. Well, also, I mean, in a certain sense, the blockchain can provide this kind of invaluable record of, in theory, truth, depending if the input is correct, right? And so if you're worried about a world of fake news, you in theory could create, you know, a blockchain-enabled service that would actually try to record, you know, from data points, like factual events that happened, and then you could actually use that as a basis for news stories. Then you could actually prove, did they say that, did they not say that? Let's actually like permanently gather a record. So there's systems like that that could be created, and that would maybe probably improve the quality of that journalism.
Well, thank you so much, Mike, for all your insights. Really appreciate your time. And for more, follow us on Instagram at Blockchain Report. We'll see you soon.